I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guest I haven't had on since February. Just an embarrassment of booking. He's a fantastic guest. Actually, USA Today also thinks he's here in the middle. Peter Schiff, is a market crash coming? Actually, a very flattering article for all these guys. They didn't paint them like they're crazy. Of course, Peter Schiff is the founder of Euro Pacific Capital, also Schiff Gold. Peter Schiff, thank you for joining us today on USAWatchdog.com.
My pleasure, Greg. Always good to be with you.
Well, in the article, which, I was surprised. I read the article. I thought, well, they're going to say, well, he was right in '07 about the coming market crash. But, he's, some terrible, black mark against you or something. They would paint you some, crazy person, which, of course, you're not. And they didn't do that in here. They actually took you serious and gave you credit for predicting a market crash. But what you brought out, that none of the other guys, is this Schiller and then also a fund manager over here, what you brought out was something they didn't bring out. It took a QE 1, 2, 3 twist, a lot of bond buying, a lot of junk going on, and they pull this again, and the dollar is going to get hit. Please explain.
Well, first of all, I predicted a lot more than just the stock market going down back then. I mean, I predicted the financial crisis, but more importantly, I predicted what the government would do as a result of the financial crisis and what the consequences of that would be, because that's where we're headed. The real crash that I wrote about, in my most recent book is still coming. You see, what happened was the Federal Reserve inflated a bubble in the 1990s under Alan Greenspan, and that bubble popped in 2001, and then Greenspan reached back into the same bag of tricks, and he had to cut interest rates even more. He had to go down to 1%, and he left them there for over a year and normalized them very slowly, but he did get rates back up above 5%. But in the interim years, he inflated a massive housing bubble, along with reflating the stock market bubble. And when that popped, we ushered in the '08 financial crisis, which would have been a lot deeper, and the stock market's decline far more substantial, again, had the Fed not intervened, just like it did last time. And so they inflated a much bigger bubble. So this is the third gigantic bubble that the Fed has inflated. And when this one pops, it's not going to be the third time's the charm. It's going to be three strikes, you're out. Because I think that this bubble is too big to pop. I think it's the mother of all bubbles. And when it bursts, there is not a bigger one that the Fed is going to be able to inflate to mask these problems. I mean, meaning that we can't kick the can down the road anymore. We're gone. We're going to have to deal with these problems. And I think the problem that we're going to be confronted with is going to be much worse than a financial crisis. It is going to be a dollar crisis. And it is going to be a sovereign debt crisis where the bonds that people are worried about are not some subprime mortgage that some guy borrowed money to buy a house he couldn't afford. It's going to be the U.S. government that people are worried about, and the solvency of the government and the treasury bonds. Because if there's a dollar crisis and people are worried about the dollar, the only thing worse than owning a dollar today is owning the promise to be paid $1 in the future. So if there's a dollar crisis, there is a bond crisis. And that is going to be profoundly more impactful on the U.S. economy, on the average American, than what happened in 2008.
You have a house in Puerto Rico, and this is not hopefully your house is still there.
Yeah, it's there.
Okay, so you know all about the debt problem down there. $874 billion, they defaulted on the debt. And I wanted you to comment on this, that Donald Trump said, we have to wipe that out, that $74 billion in debt. Are we going to have a carnival of default and inflation? Is that what you're? And not every bond's going to be liquefied and inflated. I mean, some people are going to take it in the chops, right?
Well, when you borrow money that you can't repay, default is inevitable. The only question is the form of the default. Now, when Trump was talking about wiping out Puerto Rican debt, it was basically where Puerto Rico would just not repay the loans, where the bondholders were just not going to get their money back, literally, that Puerto Rico wasn't going to pay, they're going to default. And that has to happen. And, of course, Puerto Rico couldn't pay even before the hurricane. Now, after the hurricane, it's even more impossible. But on a broader topic of wiping out debt, that is what is going to happen to all U.S. Treasury bonds. It's all going to get wiped out. but I don't think it's going to get wiped out the way Puerto Rican debt is. I don't think that we have the courage to default, to admit to our creditors that we don't have the money and we can't repay. I think we'll create all the money that we need so that we can pretend to repay. But what we end up doing is wiping out the debt with inflation, meaning you get your money back, but you don't get your purchasing power back because your money loses its value. So the debt's going to get wiped out. It's only a question of how, and people have to protect themselves.
You were trying to, you said in the pre-interview, you said that, I'm trying to get the piano player out of this party. I'm trying to get the waiters and the waitstaff, the little people. They're going to get creamed. Explain.
Well, you had asked me a question about how much debt we could have. You were talking to my wife, and you said, hey, we got 20 trillion in debt. Why can't we go to 35 trillion? Why can't we go to 40 trillion? Why can't we just continue to increase the national debt? And what my point was when you asked me, how high can the debt go? And I said, I don't know. You don't know. It reminds me of the old adage about how many straws can you put on a camel's back. You don't know until you put that final straw. That's one too many, and then you break his back. So, can we go to 25 trillion? Maybe. But can we go to 30 trillion? We're not going to know. At some point, we're going to break the back of the camel with all this debt. And then we're going to find out how much debt we can pile on, and it's not going to be pretty because then we're going to have a crisis. I mean, it's much better if you get a handle on the debt yourself instead of, waiting for a market-driven event. But no politician is going to do that. Nobody wants to leave the party early. They want to stay there until the police come to break it up, right? And when the police come to break up the party, they take everybody, right, including that piano player, and the piano player is my client. I want to make sure that my guys are not playing the piano in that party when the cops come and raid it, because everybody is going to lose. Everybody's going to get wiped out who's been partying in the stock market, particularly in the bond market, in the real estate market. The dollar is going to tank, and purchasing power is going to get wiped out. So I want my clients to be out of harm's way. That's why I've been investing, and I continue to invest for people around the world in countries that I believe to be relative safe havens. Relative to a lot of other countries, not just the United States, but countries where I think the currencies will appreciate relative to the dollar or other currencies, hard assets, gold. I mean, I'm doing what I can because you don't know exactly when it's going to happen. You just know that it's going to happen, and you better be prepared in advance, because if you're not prepared in advance, you're going to be in that paddy wagon with everybody else.
What do you say to people, and I get this all the time on my site, was, I guess we should admit by now, we missed a lot of fantastic gains in the markets. And what I want to say is, then you should admit you're playing in a rigged game where there's no real markets, where the Fed is intervening all the time. You're basically in a criminal enterprise, basically, with the program traders, front running all these trades. I mean, somebody was telling me that J.P. Morgan has a computer that can make millions of trades in a fraction of a second. I mean, it's Look, what is that?
Greg, this is all part of the same trade, right? All the people that were partying in 1999, 2000, they didn't know what was going on. The bubble burst, and the Fed bailed them out, and the market went up again. And then the same old people had no idea, right? The financial crisis surprised everybody. It didn't surprise me. I saw it coming from a mile away.
Yep,
it was obvious to me what was going to happen, but the mainstream was blindsided by it. And guess what? The Federal Reserve bailed them out again. So even though they had no idea it was coming, look, all they had to do was hold on and hope, and their prayers were answered. And they think they're geniuses. Hey, just buy and hold. Look, it doesn't matter what happens, because even if we're wrong, the Fed's going to come and bail us out again. That's what I said earlier in the interview. I don't think it's going to work a third time. I think the amount of air they would have to blow to try to reflate this bubble would blow it to smithereens. In other words, they keep giving this artificial stimulus to the economy, but we would need so much. It would be like a drug addict having to take so much heroin to get high again, that in the process they overdose. And an overdose of monetary stimulus is a currency crisis. So this bubble is so big, right? In order to blow it back up again, they would have to print so much money. The debt would have to skyrocket so much, rates would have to come down so much that the dollar would be destroyed. Remember, the reason the dollar rallied from 2013 through the end of 2015, I mean, it was up a little bit last year, but not much. and now it's starting to go down. But the reason it rallied was that everybody was convinced that the Fed's medicine worked, that the patient was healed, and that as a result, the Fed could withdraw all these emergency measures. They could normalize interest rates, they could shrink their balance sheet, and the dollar rose on anticipation of all that stuff happening. Meanwhile, interest rates have not risen nearly as much as traders believed. The balance sheet hasn't shrunk really at all, despite all the talk about shrinking it. And we are very close to another recession. I mean, I believe that we would already be in recession today had Hillary Clinton won the election. But since Trump won, there has been an outburst of optimism, enthusiasm, which I think is unwarranted. But nonetheless, it may have delayed the onset of that recession by a year or two. But when that recession comes, Donald Trump has already made sure he appointed or he nominated Jay Powell to replace Janet Yellen. So no hard money, more of the same, money printing, bubble blowing. He's got his boy in charge now, a Republican Janet Yellen. And the next time the economy turns down, then the printing presses are coming out, and they're going to lower rates, and they may not stop at 1%, at zero rather. They may go negative. They're going to do QE4, and then when the markets begin to recognize, wait a minute, they weren't able to normalize interest rates. They only got a little bit above 1%, and here we are back at zero or negative. They never shrunk the balance sheet, and now it's going to 5 trillion, 6 trillion, 8 trillion, 10 trillion, who knows where. How are they ever going to reverse this process? If they couldn't do it now, how are they going to do it later? If they couldn't shrink a $4.5 trillion balance sheet, how are they going to shrink a $10 trillion balance sheet? If they couldn't raise interest rates much above 1% when the national debt was 20 trillion, how are they going to do it when it's 30 trillion? How are they going to, or wherever it goes? And people are going to connect these dots. I mean, what I said originally was true. I said the Fed had checked us into a monetary roach motel, and that is exactly where we are. There is no way off of this policy. Once you take this much drugs, you can never get off. I mean, not without massive withdrawal. And so nobody politically wants to deal with that, because if the Fed were to actually not come to the rescue next time, the market wouldn't just go down 50% like it did in 01 and 08. It might go down 80 or 90%. I mean, banks would actually fail. I mean, the government would actually have to default on its debt. But I don't think that is going to happen. Nobody in power wants to let that happen. And so the dollar is going to be sacrificed. But ultimately, in sacrificing the dollar, the damage that's going to be done to the economy and to the standard of living of the average American is going to be much greater than had we just bitten the bullet and dealt with the financial crisis.
I have an old saying saying, you know the truth when you hear it. Woo, that's the truth. So here's the next question. I get this all the time, and I want your answer for this. Deutsche Bank admitted to rigging the gold and silver market along with other primary dealers. They paid fines. They admitted it. It's reported. We had last week or so, you had $4 billion notional dumped on the gold market. They don't have the $4 billion, naked short selling. The thing is being contrived, manipulated. They're dumping money, market orders. You wouldn't have a market order unless you wanted to lose money. You dump that much on. I want to get any price I can as it's going down. So what is stopping the powers that be from, capping the price of gold and capping the price of silver and continue the manipulation? How is the manipulation? How is the capping of precious metals? Because they should be much higher. Come on, you know that. How is capping? How can they keep doing it, or when is it going to end?
They can't keep doing it. It will end. Just like you said. Well, how much debt can we take on? I don't know. It's not an unlimited amount. We'll know when we get there. How long can they keep the price of gold suppressed? We'll know when we get there. Because at some point, the price is going to explode, because there is real physical buying. And ultimately, all that paper selling can't camouflage that. When you go into the futures markets, if you sell a contract, somebody is buying it. And that somebody can take delivery. That somebody can, issue a delivery notice and demand the physical gold. And there is more and more buying. And believe me, once we get a dollar crisis, right now you've got a lot of people, they're looking at these cryptocurrencies. These cryptocurrencies are merely, a stepping stone to get back to gold. I mean, it's an indication people don't trust fiat currencies. They don't trust the dollar, euro, yen. They're looking for an alternative. And believe me, the real alternative is gold, and more people are going to embrace it. And when they do, it's going to overwhelm the ability of central banks to suppress the price. In the meantime, enjoy the gift that they're giving, because if you haven't already bought your gold, whoever is selling it is doing you a favor. The fact that the price still doesn't reflect the fundamentals means that it's easier to accumulate gold now.
I was at a coin store in St. Louis, and the price of silver is like 16, 17. Price of gold's 12.70, 12.80, whatever. And I was surprised. I was shocked. I mean, they had people lined up 3 deep buying gold, and I thought, well, this is like the opposite of what you would expect. The price is suppressed, and but there's a lot of people out there that say, ha, 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 well, we know how this ends. Is that what you're saying? That strong hands are now holding gold and silver?
There would be a lot more buying if there wasn't all this false optimism related to Trump. A lot of the typical gold buyers who, were worried about the economy when Obama was president, they're not worried anymore. I mean, they think Trump is going to make America great again. And they're wrong. I mean, he's not going to make America great again. I hope America is great again at some point, but it's not going to happen during the Trump presidency. And people should be more worried, because a lot of the problems that built up under Obama are getting worse under Trump. A lot of people are excited about the tax cuts. In fact, the dollar rallied a little bit on the anticipation of these tax cuts. But these tax cuts are actually negative for the dollar. And they're no different than tax cuts we've seen in the past. Tax cuts are good for the economy to the extent that they reflect a smaller government that is less expensive and therefore a smaller burden on the taxpayer. So if you reduce the size of government and then you reward taxpayers with tax cuts, because now government is smaller and doesn't require as much of our resources to support, that's great for the economy. Right? Shrinking government and freeing up resources back to the private sector is good. But that's not what we're doing. The government isn't getting smaller. The fact that government is getting bigger. All the tax cuts are doing is we're saying we're going to pay for big government through a means other than taxes. I mean, we're still going to tax you, but we're not going to tax you as much. We're going to let you keep some of the money that you would have sent to the government, but the government is going to find another way to pay for itself, because there is no free lunch. And if we're not going to pay for the government with taxes, how are we going to do it? And we're going to do it with additional debt, additional inflation. The Fed is going to have to print the money that the Treasury no longer collects in taxes. This is going to do more damage to the economy than the benefit of people having more money in their pocket to spend. And so we're going to have more inflation. And so what the government gives you with its right hand, they're going to take away from you with the left hand. And, the most expensive way, or rather the least expensive way to pay for government, is with taxes. So if we're going to pay for government through debt and inflation, ultimately that's going to cost us more. And of course, if the public thinks that they can have more government and not have to pay for it, then we get more government. I mean, the public should be told that if you want all this government, it's going to cost you, right? We should be having tax increases if we want to increase the size of government. But the politicians are telling us that the middle class deserves a break. Well, how are they going to get a break if the government keeps spending more and more of their money? So the dollar rallied on the anticipation of these tax cuts. It's going to sell off on the realization of these cuts, because these cuts are by definition dollar bearish, because it means the government is going to have to create more money, more dollars. The supply of dollars is going to go up because government is going to be financed by inflation as opposed to taxation. Meanwhile, of course, as we go back into recession anyway, despite these tax cuts, the deficit is going to explode, not only because the government has reduced its revenue, but because of all the increased expenditures that come from recession. And don't forget, interest rates have risen quite a bit. Even though they're still very low, you've got maybe a couple 100 basis points back up in rates. So what happens next year when a lot of these bonds that the government issued, or notes that they issued with a 0.2 or 0.3 coupon, and they have to roll it over and it's 2%, where are they going to get that money? I mean, you're talking about an enormous amount of money in extra interest expense. And of course, a lot of that interest payments, they go to foreign holders. I mean, none of that money is recycled here, right? It's sent to Japan or China or Saudi Arabia. So our deficits are going to explode through the roof, in the coming years. And all of this is going to weigh heavily on the dollar.
Peter Schiff, of course, you're at Schiff Gold. You're also with Euro Pacific Capital. I'll put up all the links to your websites. You also take on clients where you manage their money as well. I want to make sure people know that. You and Michael Pinto are two of my favorite money manager type guys. But I think you really look after small guys. little guys, not multi-billionaires, but people that have saved their money and want to keep some of it. Peter Schiff, thank you so much for joining us today on USAWatchdog.com.
Thank you.